Where do you stand?
Oh, after doing this for 40 years, I realize I'm not much of a good short-term guesser, but I think we're going into a year-end time that's traditionally pretty good, and we're starting into the third year of a presidential cycle, so should be okay. And we've had quite a tough year starting out, so I think we should be okay. But again, what we always counsel people is make sure your asset allocations are good for you, and be ready to weather these type of storms. So I think we should be setting up pretty well.
Mark, the Nasdaq seeing its best day since April of 2020, up 7%. Are you reevaluating your exposure to technology given what we saw in the October CPI report?
Well, listen, Steve, I had clients call me over the last month or two talking about how volatile this market's been and what in the world they should do, and stressing me out. It's probably asking you all type of questions as well. And what I'm telling those clients is this is a great time to possibly look at selling out of your portfolio. We've had a nice run. If you were complaining about how the volatility has been and you wanted to get out, hey, after a day like yesterday, I'm telling clients, if you want to have some cash on the sidelines, this is a great day to do it this Friday and take some money out, because if the Fed is continuing to be aggressive, you just saw the numbers come out for inflation. They weren't down, they were still up. Even though everyone wants to paint a rosy picture around the inflation number, it was still up at the end of the day. We're still at 40-year high inflation. The Fed will have to continue to act. If that's going to happen, it should affect real estate prices eventually, and that's what many of my clients are worried about, with the 30-year fixed rate nearing 30-year highs. Eventually, chickens will come home to roost, and it will affect the equity market. So if you wanted to get out 2 weeks ago, yesterday's a great signal to tell you to go ahead and sell.
David, do you agree? I mean, it's a good point. Inflation may be coming down, but it's still arguably pretty high. If you look at the core CPI, excluding food and energy, 6.3% for the month of October.
Yeah, all true. And I think it's probably priced in, but who really knows in the short run? We are very long-term investors. We've owned some stocks for decades. So we are going to hang in there with our diverse stock portfolio. We're going to own some of the great tech stocks. We're going to own some financials, some healthcare, and we counsel people patience. If you want to achieve these long-term returns of say 10% on stocks, then you have to be willing to ride through periods like this. And trying to, I think, sell now and figure out when to get back in, at least I can't do it. Doesn't work for me. So we buy good companies that hold on to them for the long run.
Yeah, it's always tough to time the market, Mark. But what's your take on real estate with the significant move we saw in the 10-year yield below 4%, the 30-year back below 7%? I mean, is this a sector you would be more bullish on now?
Listen, I think that the sector that I would be bullish on right now is the financials, and that's because we are in a rising rate environment. And in a rising rate environment, historically, financials have really led the way because of all the ways they can make money in that rising rate environment. You have net interest margin, you've got credit cards, mortgages. In an environment where it's a little more volatile, you might have a lot more M&A pickup, and then the banks still make money there. The wealth management business in many of these large financial centers are solid, and they're going to be here to stay. So in my mind, in this environment, that's what we can take. We don't have to forecast in the short term or the long term. We are where we are. Interest rates are at 40-year highs. Banks tend to do well when interest rates are this high because of all those reasons I just said.
And Mark, just quickly, how important will Walmart's earnings next week be for the broader market, right? Just to get a sort of gauge on consumer sentiment, especially going into the holiday season.
Yeah, Walmart is a bellwether name. It used to be GE, now it's Walmart. It's one of the largest employers in the country, and it really gives you a good litmus test of what's going on in the American economy overall. I think it's going to be a really important stock to watch. And you saw from what happened in the last earnings, didn't do too hot. We'll see what happens going into the new year. But I do know that there is more cash in Americans' hands than ever in American history still coming out of the pandemic. And they may want to spend something visiting friends. Remember, this is one of the first holiday seasons since the pandemic. So a lot of folks have a lot of catching up to do. I think that stock like that should do well going into the holiday season.
Mark, quick final word.
Sure. I would just tell everyone to, as we talked a little bit about, and David mentioned, you got to stay invested. For those of you who have more short-term views and are retired, this is a good time to take heed of what's going on. You had a great run-up yesterday. Maybe you want to get a little more defensive right now. This is a great opportunity.
And David, final word to you.
Be patient, hang in there. I've been through 4 or 5 of these. We'll get through it. We'll come out the other side. Look around for some bargains if you have some cash. Maybe take some tax losses if you're an individual taxpayer, but hang in there. We'll get through it. We've been through, a pandemic and a war in a short amount of time, and we'll come out the other side.